Mr Speaker, my question is to the Minister of Finance and reads, what reports has he received on the economy moving away from government spending, housing speculation and borrowing and towards savings and exporting?
The Honourable Bill English.
Mr Speaker, the Reserve Bank this morning issued its monetary policy statement for December. It confirms what I've been saying about the economy in recent months. The near-term outlook for GDP growth has softened. Beyond this, higher export volumes and the Canterbury earthquake repairs are expected to push growth above the Reserve Bank's previous forecasts. For example, they now expect GDP to grow by 3.4% in the year to March 2012. They also expect inflation to remain subdued after a temporary one-off spike from the GST increase and forecast continuing falls in unemployment.
Craig Foss.
Thank you, Mr Speaker. To the Minister, what did the Reserve Bank forecast say about national savings?
The Honourable Bill English.
Well, Mr Speaker, it confirmed, I think, what we all know, which is that New Zealand needs to lift its levels of national savings, and they pointed to some encouraging early signs. It notes that the current account deficit is actually low by New Zealand's recent standards. They predict the current account deficit will average around 3% of GDP over the next 3 years, significantly better than the average of 8% between 2006 and 2008. They note, I think, what we've all observed, that households are being cautious with their spending, they're saving more and they're paying down debt despite interest rates remaining very low.
The Honourable David Cunliffe.
Speaker, in relation to the Reserve Bank's forecast issued today, can he confirm that they show growth revised downwards by a full % through mid-2011, unemployment tracking above 6% through 2011, and a $4 billion blowout in the fiscal deficit, such that the economy is now tracking below the worst-case scenario in Budget 2010?
The Honourable Bill English.
Well, Mr Speaker, I don't think any of that is news. We've been discussing for some time in the House the fact that the economy has been softer through the middle of this year, and their forecasts for the year ended March 2011 are something like half or 3/4% lower than was expected at budget time. That's correct, and that means that what's actually happening is, because people are saving more and spending less, we're laying the platform for better growth later.
Craig Foss.
Minister, what did the Reserve Bank say about the role of the government in helping to increase New Zealand's national savings?
The Honourable Bill English.
Well, Mr Speaker, the Reserve Bank encourages the government to get back to surplus a bit sooner than the current settings. The Reserve Bank argue that faster elimination of the deficit would improve savings and ease pressures on interest rates and therefore on the exchange rate. This would have the benefit of reducing our dependence on international borrowing and also increase returns to exporters and assist the rebalancing of this economy, which is underway but not at the speed which the government would like to see.
The Honourable David Cunliffe.
Speaker, when the Minister told the House yesterday that the deficit is set to grow to $11 billion this year, can he confirm that this is more than $4 billion over the $6.9 billion forecast in Budget 2010?
The Honourable Bill English.
Mr Speaker, it is expected to be larger than the budget forecast in 2010, and the reasons for that have been outlined, which are that the economy was flatter, particularly in the first quarter of this financial year, and we've also had one or two one-off expenses like the Canterbury earthquake, which the member may think differently, but I think it was unavoidable.
Craig Foss.
Thank you, Mr Speaker. To the Minister, what measures will the government consider next year to reduce fiscal deficits and return to surplus?
The Honourable Bill English.
Mr Speaker, we're committed to getting back to surplus no later than 2015-16. The government will continue with the spending discipline that it's exerted for the last couple of years, and those disciplines will continue to tighten on the public sector. Next week we'll issue the government's first investment statement, which will make public for the first time in a sensible way the size and ambition of government's capital investment program through to 2015, how it is to be funded and where efficiencies can be made.
The Honourable David Cunliffe.
Real GDP per capita has so far gone backwards, which is why New Zealand households have gone backwards and are struggling to make ends meet.
The Honourable Bill English.
Well, Mr Speaker, New Zealand households have not gone backwards. Some certainly have. Some have because people who relied on the previous government's debt-funded binge to secure their jobs were sorely disappointed. They've lost their jobs, they had income cuts, and we are working very hard to rebuild their prospects.
Question number 2, the Honourable Pete Hodson. I beg your pardon. Supplementary question, the Honourable Sir Roger Douglas.
Mr Speaker, does the Treasury advice regarding the ownership of state-owned assets referred to by Treasury's John Crawford include recommendations to expand PPPs through partial sales of state-owned assets? If so, would he consider such a proposal?
The Honourable Bill English.
Well, Mr Speaker, Treasury, as far as I can recall, haven't made that particular recommendation. The government's position has been clear, and that is no partial sales, no sales of assets in this term, and if that position changes, we will campaign on it. But I might say that that is a very small part, relevant to a very small part of the government's balance sheet. The government owns $235 billion worth of assets, and if we can improve the management of all of those assets, it will have a much more significant impact on taxpayers' value than a few partial floats would.
The Honourable Sir Roger Douglas.
Given the Minister's reply, does he believe that the $94 billion overseen by the Crown Company Advisory and Monitoring Unit is the best use of that capital for New Zealanders? And if so, why are the dividends paid out by the 17 SOEs it monitors showing an average return of 2% compared to 4.5% for private companies listed on the New Zealand Stock Exchange?
The Honourable Bill English.
Well, Mr Speaker, I think that is a very good question. In recent years, the SOEs were allowed to retain much of their surplus cash. That's gone into an extensive investment program. The taxpayers have not benefited yet from that, and we should be expecting more significant increases in dividends from that significant increase in investment in recent years. The government has published that information so that everyone can see what is going to be required to get better performance out of those assets, and it's quite a lot.
Question number 2, the Honourable Pete Hodson.